A record close for the Dow on comments from the Federal Reserve, although the futures markets are pointing to a pullback this morning. Standing by with me is Knuckman, Chief Market Strategist with OneStopOption. You talked about energy last week and you mentioned it again this week. Why is that sector so hot for you right now?
Well, for a long time, obviously, it had led the market and had been put to the side with technology in the forefront. I think it's important to realize that technology is not the market. It's one of the sectors. And it's interesting to see the XLE, the ETF that tracks energy, make new highs. And we've seen a push, and that's assuming leadership once again. So I think that's a very powerful sign because it shows the ability to pay. We've been maintaining around this $100 a barrel level in crude oil. And that's a very optimistic sign for the global economy. And looking at this market, I think it's important to note that two big Dow components, Chevron and Exxon, are barely positive for 2014. Only 18 of the stocks in the Dow 30 are positive. So I think when energy gets rolling, that could be very supportive as those stocks have a lot more upside.
And ExxonMobil reports its earnings today. I want to talk about Treasuries. They've been in a tight trading range for about 3 weeks. In your opinion, what's the next move and what happens if rates do in fact go higher?
Well, it's been a very tight trading range the last 3 weeks, but it's more important that it's been an even tighter range here the last 3 months. We've been trading in the 10-year note between 2.8% yield and 2.6%. And then if you even go out further, since last June, we've been trading in a half a point range between 2.5% and 3%. So yeah, rates are creeping up, but we've got to put it in historical context. The all-time, well, not the all-time high, but the 20-year high in the 10-year note is 8% back in 1994. And then this recent low, this extreme low back in June of 2012 was 1.5%. So the midpoint in Treasuries is 4.75%. We have a lot of upside to go, and that's not necessarily a bad thing that's going to hurt the economy. It's going to be a sign, again, another sign of optimism when long-term rates move up because of supply and demand. I think it's also important to note that when we made those lows back in June, since that time, rates have been climbing. The stock market is up 45%. So the market can continue to climb even as rates go up is an important lesson.
And based on what we heard from the Federal Reserve, rates are probably going to start heading up in 2015. Knuckman, thank you. He's Chief Market Strategist with OneStopOption. I'm Joya Das at the Wall Street headquarters of TheStreet.com.